Okay, I think we are great to go. Hold on one second. Okay. All right, ladies, I think we are ready to roll out. Hold on one second. Why is it not sharing? To share screen. Okay, perfect. Awesome. I want to make sure that we are live on our channel. Perfect. So give me one second and I'm gonna get started. If you ladies can hear me, just give me a thumbs up so we're good to go. Can you hear me okay? Perfect. Well, welcome so much for I'm just so thankful that you ladies had opportunity to join us on today. This special presentation is truly dear to my heart. And I'm just excited because it is time. It is time for knowledge like this to be shared to everyone. So, welcome to Core Financial Partners. Your goal is our crusade. All the goals that you have in your life, where our goal is to see that you achieve that. So, welcome to a world of infinite financial possibility. So, this is me here, guys. My name is Melissa Lambert, and I am a licensed financial consultant and the founder of Lambert Legacy Financial. I am partnered with Core Financial Partner. I am very passionate about just empowering individuals and their families, teaching them the importance of financial education. So, with Core Financial Partners, our vision and our mission is so dear to me because I truly believe that the co-founders and the founder of this company, Tony and Latoya Chambly, they truly wanted something as powerful as this to not only reach their families, but they wanted to reach the masses. So, what is our vision? Our vision is to educate, guide, and empower people to become their own banker, taking charge of their financial freedom. Just imagine that. You know, each and every day we go to work. Every other week we get a check and we write that check off or we deposit that check into a traditional bank and we have no control of it. Just imagine now you have a company like Core Financial Partners coming together to say, you know what? You can be your own bank. You can take control of your financial freedom and financial future. So that's the vision of Core Financial Partners. What is the mission? The mission is to provide financial education and tailored solution that transform families from dependency on the traditional bank, your Wells Fargo, your Bank of America, your Navy Federal. Those are what we call traditional bank to really get you to a complete financial independence. So that is our mission on today. So I want you to keep an open mind onto understanding that you matter to the point where you can get that control back into your life. All right. So you matter, your finance matter, and it's time to get that control back in your life. So what is our philosophy here at Core Financial Partners? Our philosophy is more money does not get and keep you out of financial situation. Only financial education does. And that is why we exist. right? We really first want to educate you. We will always inform you, get you to that place where you have the knowledge to understand exactly what's happening around you. What is going on with my money, right? So we're going to give you that knowledge each and every time you meet with us. We want to make sure you are informed with this information. So that's the power of our philosophy. So again, our vision provides awareness and education that brings prosperity. So what I'm going to do now, I'm going to share with you our we call it our 4S missions. And I'm going to kind of have you, if you want, if you're jotting down, writing notes now, this is a really, really good time to write those things down. So core financial partners. Our goal is to really give you some guidance to your financial freedom. But in this situation right now, many of us are in these four different S's, right? Some of us may be in survival mode. Some of us may be in the process of security. Some of us may be going through that success phase, or some of us may be just, you know what, I'm at that significance, right? So these are the four S's that we go by. So many of us are in that survival mode. What is that survival mode? Living paycheck to paycheck. That's it. Living paycheck to paycheck. Basically, robbing Peter to pay Paul. There's not a lot of zeros at the end of the month. That is that survival mode. Our goal is to get you out of that survival mode and kind of push you to that space of security. What is security? Saving 6 months of your income. So whatever your income is on a monthly basis, you want to times that by 6, because that should be what you should be putting into your privatized bank to have it as a saving for yourself. That is that security. The next is success. The third S is success. So we want you to now, once you get out of that survival, you're now having that 6 months of saving. We want you to start buying assets, cash flowing investments or properties or things that will give you more, income producing activities or income producing within that house. That's that success level. And we all want to get to significance. What is that significance? Freedom to make a difference in the lives of others, creating future legacy. We all want to get to significance. And the goal here with core is to get you from the bottom all the way to the top. And then guess what you're going to do? You're going to teach someone else to do the same. You're going to teach your sister, your brothers, your auntie, your uncle, your mother, your father. You're going to not just get up to the top of the significance by yourself. Our goal is to make this a generational wealth. And we're going to do it not just by ourselves, but we're going to do it together. So there is power, y'all. There is power when it comes to becoming your own bank, the power of becoming your own bank. So let me just really slow it down a little bit right now, because this is going to be a new concept that many people have not, they may have heard about it online on TikTok, Instagram, or Facebook, but they don't really understand the deepness of infinite banking. So I'm going to slow it down a little bit right now so we can get some clarity. So what is infinite banking? A financial strategy where you use whole life insurance policy to create a personal banking system. I want you to understand something first. A bank is not just a building. A bank is a concept that we use every single day, but we're not taught how we can be the bank where we're getting the interest rather than giving the interest away. So with the strategy that we're going to teach you, it's going to show you how to now own back what you actually puts into a building, which is a traditional bank. We're going to show you how to now reverse that to yourself. And we're going to utilize the whole a whole life insurance policy to create a personal banking system. You're like, what? Please keep your what right there, because I'm going to explain a little bit more. Okay. So what is the infinite banking system? It allows you to manage, grow, and access your money with tax advantages and liquidity and control. And guess what? You're going to have all that access on your terms compared to the banks, right? They're going to tell you on a daily basis what your limit is. They're going to tell you how much you can take out. They're going to tell you even they're actually going to even stop any transaction from coming in that looks weird on there or not a part of their policy, right? So with having your own infinite banking, you now have control. You have access. You are now able to manage your own funds. Guess what? And that's done tax free, right? So I'm going to share something with you in a quick video so you can not only hear my voice, but hear someone else's voice. So, how to control your wealth and become your own bank. On the right hand side, you see a book. It's called Becoming Your Own Banker. I want you to write that down. That's the first book that you will get. Becoming Your Own Banker. Don't believe everything that I'm saying. I want you to believe me, but don't believe everything without you reading information as well. And then you're like, oh my gosh, Melissa was right. Yes, information she's given and match up to what this gentleman is saying. R. Nelson Nash, he is the author of this book, but he's the founder of Becoming Your Own Bank. So I want you to also grab that as well. So I'm going to have this video to play so you can have some more clarity. And if you can hear it on, ladies and gentlemen that is listening, if you can give me a thumbs up, let me know you can hear, that'd be great.
Whenever we borrow money to finance the purchase of a car or a boat, furniture or appliances, a new roof or home addition, a college education or postgraduate degree, we typically pay more interest to a credit union, bank, or finance company than we earn on our own savings and investments. For example, we might pay interest rates of 6 to 13% on a car loan or credit card, while we earn as little as 1 or 2% on a savings account, and hope to average 7 or 8% on a 401k account. But now there's a way to become our own bankers and profit from our own borrowing, because now we can set up our own bank and pay interest to ourselves on our own terms and without any application or loan approval process. It's called private equity banking, and it's made possible by Internal Revenue Code Section 7702, which allows us to put money into what the IRS refers to as a qualified contract with a legal reserve insurance company. This provision of the tax code allows us to transfer money from our savings or investment accounts into one of these qualified contracts, continue earning interest or dividends without any taxation or investment risk, and then borrow up to 90% of this money using the contract equity as security or collateral. Of course, there is an internal cost or charge to borrow the money, in much the same way that banks must pay depositors for the use of their money, which means that we are obligated to pay off these loans with interest, just as we do with a credit union, bank, or finance company. But with our own bank, our loan collateral continues to earn interest or dividends without any taxation or investment risk, so our bank equity continues to grow while we use the money any way we want. What's more, there is no application or qualification required, no credit check or reporting to any credit agency, and no delay in getting the money. You simply submit a one-page form and get the money by check or direct deposit, usually within 48 hours. And like a revolving line of credit, there is no mandatory repayment schedule. So we determine the repayment amount, the months or years for repayment, and the interest rate we pay back into the contract. And any interest we pay over the minimum is a profit for us, which is added to our bank equity. This is the same way that banks and finance companies profit from lending money. However, before we can borrow any money, we must capitalize our private equity bank by transferring money into the contract that would otherwise go into our savings and investments. This might include a percentage of our monthly income, a yearly bonus from our employer, annual tax refunds from the government, or any inheritance from our relatives, as well as money we've already saved in other accounts. But once our bank is sufficiently capitalized, we can borrow against the contract equity at any time and as often as we want, without any credit check or loan approval process. We can simply submit a short one-page form to borrow up to 90% of our bank equity, and the money is either sent to us by check or deposited electronically into a checking account within a day or two. Some contracts even provide debit cards that we can use to access our funds, similar to a revolving line of credit. What's more, we decide when we want to begin paying off our loan, how much we want to pay, and how often we want to pay it. However, we want to have all our loans paid off by the time we retire, so that we can then supplement our retirement income with tax-free money from our private equity bank. And if the contract is properly structured, any loan debt remaining at the end of our lives will be contractually paid off for us, tax-free. To learn more about setting up your own private equity bank, talk with the financial security professional who asked you to watch this video.
Wonderful. I'm hoping that that kind of gave a little clarity for you. So now let's dive in. I'm going to kind of break that video up within the next slides, giving you the more clarity and understanding. So how does infinite banking really work in the real life? So I'm going to put together two different scenarios. And these two scenarios, many of us can say we own a car. Many of us can say over the time, the parts over time, we have had some form of emergency expenses. So let's start with the first scenario. I want you to think about this, okay? You need to buy your vehicle. So there's two scenarios, two different ways you can buy it right now. Now that you understand there is one way called infinite banking concept. We're going to abbreviate it to become the IBC. So you can choose to buy this new car of yours through the IBC way, which is now utilizing your bank, the infinite banking, by taking a loan from your policy, pay yourself back, and continue to earn interest, which is, again, remember, we're not interrupting your money. This is uninterrupted interest happening within your own privatized bank. Or you can say, you know what, I'm going to do the traditional way, take a loan from the bank, pay them back with interest, and lose control of your money. So I need you to put that into kind of really grab a hold of what I just shared with you. Which way really do you want to buy a car now? Do you want to give the interest to yourself and continue to earn the interest on your money that's now in your privatized bank? Or do you want to give interest to the bank and lose control of your money? If you want to do the first scenario, ABC, which is a IBC, I want you to drop a 1 in the chat. If you want to do the traditional way, you want to give control away and give interest back to the bank, drop a 2. So a 1 if you want to do the IBC way, and 2 if you want to do the traditional bank. How would you buy your next car? The second scenario I want to show to you again is we have these emergency expenses that's happening, right? And we would just go to the traditional bank, and rely on emergency savings or high interest loans with strict approval process, even charge it on our credit cards. Or now that you know better, you're about to do better, and you're going to utilize your IBC, which is your infinite banking policy, to borrow from your policy at any time, no penalty, and no approval needed. Again, if you want to, utilize your emergency expenses at that moment and do it in a traditional way, you can in an IBC way, drop a 1 in the chat. If you want to say do it in a traditional way where you're now literally getting that high interest loan, and now being strictly in this process of saying, you know what, I got to pay them back with high interest, and I got to pay them on this time a month. If you want to do it in a traditional banking way, you can drop a 2. But I'm praying that you understand the concept for you in the future is not going the traditional way. Before, yes. Now that you know better, now that we're presenting you how you can take control of your own bank, I pray that you do better and become your own bank utilizing the IBC way. So now let's talk about what that traditional bank looks like. Because we've been indoctrinated to say, Open up a traditional bank, a checking account, and a savings account. Use use your money to pay your bills out of your checking account and save in your savings account. That's what we've been told over these years. So in a traditional bank, right, it's a corporation. Traditional banks are corporations owned by consumers, not for consumers. What does that mean? You are their business. Without you, there's no banks. Okay. A traditional bank model, banks use your deposit, my deposit, to lend out to others at a higher interest rates, right? Banks, what their model is, they use you earn minimal interest. So you're not going to earn a lot, maybe 0.01% interest, while the bank profit on the more. You get that? So who's really benefiting, y'all? Who? The banks. The banks are benefiting by using your money for profit. But they haven't told us that. They just, again, allowing us to believe their way is the right way. We're going to be doing what the banks are doing now and not what they're saying for us to do. So you, the consumer, truly get little to no return or control on the money you work hard for. So look what's happening with this traditional bank. Your money go in, the bank profits, and you, the consumer, gets minimal return on your investment or your money that you put in the bank. Y'all, let's make that make sense. So now what I'm going to do is I'm going to move to the next slide, and I want you to now see the different benefits. There are about up to 15 benefits. I think I have about 15 benefits of why becoming your own banker is so important, and you need to know it now so you can take advantage of it, not later, but now. So let's write down these reason why. Why becoming your own banker? Why? Unlimited access. Unlimited access. You now have the use of your money whenever you need it without penalty. The second is tax advantage growth. Grow your money tax free while still using it. We will show you how that's going to work. Three, create legacy. I mean, what are you working for? Are you just working to just pay a bill? Are you working to help your children go through school? I know one of my good friend that's on right now, she worked to help her boys go through elementary to high school, middle school to high school to college. Now they're have their big careers, right? Now she's in her life of enjoyment, right? She did what she had to do. Now it's time to create legacy. Our goal is to what? Build wealth for future generation. What is your future generation? Your children's children's children. That is the legacy. What is now the fourth benefit? The fourth benefit of infinite banking is what? Cash flow flexibility. Access your money anytime without penalty. The fifth one, tax-free growth, like we talked about. Money grows tax-free within the policy. Six, guaranteed growth. Whole life policy provides guaranteed growth of your money. Six, self-financing. Use your policy to finance purchase, small purchase, big purchase, whatever you normally purchase. Use your policy to finance it. And even those things that you want to invest. Liquidity. Easily borrow from your policy whenever you need. And the big word, the big P, y'all, is privacy. No credit checks or approval needed for a loan. Family legacy. Now we're talking again. What are the benefits of having an infinite banking? I hope you're writing these down. And if I'm going too fast, I promise you, you're going to hear this information over and over again, and it will make sense. Okay. So, family legacy. Pass on wealth tax free to your heirs. Loan repayment flexibility. Pay back your loans on your terms. But all I'm asking of you is be an honest banker. If you would borrow from your traditional bank $10,000 and they put on their 18% interest from that loan, why wouldn't you give yourself that same interest? So if you borrow your privatized banking, which is your cash that's inside of your cash value, if you borrow that out of that 90% of that, you borrow $10,000. I want you to pay yourself the same way you would have paid a traditional bank. Why? If you don't do that, you are robbing yourself. I want you to remember that. Don't rob yourself from getting more interest because you would have done it anyway to a traditional bank. The next reason why you need to, have an infinite banking account and the benefits of infinite banking is control. You have total control over your money, unlike traditional banks. Like prime example, I wanted to transfer some money to my dad. Fifth Third Bank said, no, you only have $1,000 limit. I had to only do 1,000 there, and then I had to go to another bank to do another 1,000. Make that make sense. With you having your own infinite banking, you have control. Next, protection. Safeguard against financial downturn and market volatility. Like when the market shift, your money don't shift. Your money is safe with us. Peace of mind. Know your money is growing even when you borrowed from it. Because your policy, your death benefit is collateral. So while you borrow from your cash value, your death benefit is held as the collateral. So your money that you are borrowing, it's still uninterrupted. There's that peace of mind. The next and the final is compound growth. Your money continues to compound uninterrupted, even while you are using it. I mean, somebody drop a fire for me because this is powerful. This has not been told to us. But guess what? The secret is out. Now you know. Let's see how you're going to do better with that. So I'm going to kind of share these three things. I'm going to just pull them all up for you. So, infinite banking in the real world. What does that look like? Infinite banking isn't just for individuals. Many large corporations, I want you to get me, your banks, your businesses, they take advantage of infinite banking. They understand the power of controlling their own capital, your capital, and growing their wealth tax free. So, the banks, Wells Fargo, Bank of America, Chase, yes, even your major banks use whole life insurance policy as part of their financial strategies. Can you believe it? Banks like Wells Fargo, the Banks of America, the Chase, the Navy Federal, the Fifth Third holds billions. Yes, I said it, billions of dollars in these policies. It's called BOLI, y'all. Look it up. Bank owned life insurance. BOLI. Bank owned life insurance. Corporations. Companies like Walt Disney, J.C. Penney's, and McDonald's have all used cash value life insurance to fund their operation or expenses throughout their throughout the tough times when times were getting hard and when we had COVID. Guess what they went through? They went to their COLI, corporate owned life insurance. It's called COLI. All right. Look it up. Business owners, entrepreneurs like myself, small business owners use infinite banking to fund business expenses, purchase equipment, invest, in new opportunities. This is going to allow their money to grow even while it is in use. Y'all, it's time. It's time to take control of your financial future. The timing is now. So, for those who have children like myself, I only have one, but if you have a child, a niece, a nephew, a grandchild, a great grandchild, if you have someone that you love that are underage, you need to make sure they're secure, their future is secure. And it start now with them. Don't wait until they're uninsurable to start a plan with them. Their plan is so inexpensive, y'all. So we say start early. Grow. It will grow while they're young. So it's going to grow bigger. So starting an infinite banking policy for a child sets them up for lifelong financial security. How we all wish, all these adults on this line right now, how we all wish our mom and our dad thought about this when we were like 2 years old. We be multi-millionaires right now, maybe billionaires, right? Because we're all in our late 40s and 50s and 60s, you know? So just imagine if they thought of us in that way. So just remember with the policies, when you start a policy at a young age, the cash value will grow exponentially over time. What that's going to do for you, it's going to provide opportunities and financial freedom when they reach adulthood like us. There is benefit in childhood. I mean, and you literally starting this child a policy at a young age. What are the benefits? Lower premium. Premiums are much lower when the policy starts at a young age. It can range from what $15 all the way up to maybe $30. I mean $50, depending on how much policy you want, how many whole life insurance you want on that child. Guarantee insurability. That part, these kids don't eat healthy, y'all. Diabetes around the corner, high blood pressure is around the corner. Okay. High cholesterol is around a quarter. But when they have this policy in place at a young age, they have guaranteed insurability. Your child will always have insurance coverage, even if health issues arise. For those who want to save for their children for college, this is a great way to put it, right? Because your child may get to an age where they're supposed to go to college and they're like, you know what, mom, I want to actually be my own boss. I want to invest in a business. Guess what? You could take that, use that cash value that's in that policy and say, okay, baby, here it is. I was saving it for you to go to college, but you want to do a different route. Okay, let's use it for good. Education funding. When it comes to time for college or starting a business, your child can borrow from their policy, y'all, without depending on student loans or outside lenders when they become an adult. Guess what happens because you started this policy at an early age? Debt free growth. You know, they don't have no debt, y'all. Your child enters adulthood with no student loan debt and access to liquid capital for anything that they need. What also happens when they become an adult because you started a policy early? Wealth building. The policy cash value continues to grow, creating a self-financing tool for purchasing homes, starting families, or even growing future wealth. What happens when they get a policy at a young age and they now an adult? Legacy building. The policy continues to grow and can be passed down to future generation. That's where you want it. You want legacy to continue to live on. So I'm going to zoom in a little bit more so you can see like my policy. I'm 44 years old. This is me. Again, I have a whole life policy with a term. So we do whole life together with the term. So you will see that my whole life on the right-hand side, my whole life policy is $74,455. Okay, I'm going to go to the right side and you see FPUR. What does that stand for? That's going to be your funding. You're going to fund this policy, you receive premium. This is what we call a dumping. Okay, this is a dump in one time, a big dump in for the first 12 months, right? That's $7,200. I have 12 months to fund my policy in savings of $7,200. I'm gonna go to the left side. So with the left side, I want you to see this. You see my initial premium for the year is 9,150. How did I get that? Remember my 7,200 plus my premium is $150, but we times it by we doubled that. So it's not 1,800, we did it 3,600. So when you add when you add 7,000 plus the 1,800, that's where you get the total of 9,000, and then you have the 150. So that's where you get the 150 premium. Okay, so you're going to see two different stage. You're going to see the guarantee value and the non-guarantee value. There's a reason. Guarantee value, you see there's no dividends. The non-guarantee side, you see there is annual dividends. We have never missed. We have here at Emeritus has never missed a dividend in over 100 plus years. So we will never be on the guarantee side. We will always look over here on the non-guarantee side. So I want you to look at these these two sections, annual dividends, cash value, and the death benefit. So look at, I remember we did an outlay. Your first year, you will see that the outlay of that, meaning how much you put in is a little bit more, 10,800 you deposited in your account. Okay, I deposited, Melissa Lambert deposited. But you see the cash value difference was 8,702. The difference is made up right now in the death benefit. Remember, I had also term, plus I had $150,000 in term, plus my 74,455. But look how in the first year my death benefit grew. I want to bring you down to year 5. So year 5, I am 48 years old. My cash value is growing, as you can see, from 8,702 to 11,915. Remember, I'm doing my regular premium of 150 times times 12 is 1,800, but I'm doubling that. I'm saving also extra $150 a month. So I'm saving an extra 1,800 for a year. So that's why you see this total outlay the second year at 3,600, because I can do a major dump in the first after the second year. So that's why now you see my growth from 8,702. My cash is now grown. This is how much I have available to me, 11,915. But look at my debt. So not only is my dividends growing, but my cash is growing and my death benefit is growing. So what I would have done in my traditional bank, so I always say to people say, how much do you start your bank with? I will ask you a question. How much do you save in your traditional bank? So if you save $500 a month in your traditional bank, move it over here. Because guess what? When you move it here, you're getting three things with one money. So the $500, you're going to get dividends to you. You're going to also have your savings, which is that cash value, which is that 500, right? But out of the 500, you're going to buy death and death benefits as well. So you get in 3 for 1. That same $500 you would have put in your traditional bank, you're now moving it where you control it. You're getting dividends is, your surplus of your premium, giving it back to you in interest, right? So that's free money given back to you. You're still doing that savings anyway. Over here, you may say, you know what, I'm going to save 250 and I'm going to put the other 250 towards my death benefit. You're doing 3 things with the same $500. So, but I want to bring you all the way down now. Let's go all the way down to retirement age. I'm going to retire, at 61. I want to show you, I'm sorry, let me just show you something. In 10 years, do you see how much free money I got in interest? $3,227. $3,227 in interest. In interest, dividends. Annual interest for the 10 years. Where can you go in your traditional bank in 10 years and see this free money? Please tell me where. And I want you to go down now to 17 years later. Look at 17 years, that annual dividends. 11,461. But look how my cash started at 8702. Look how much I've saved so far in 17 years. $84,023. But look at my cash. Remember, my term dropped off right here after year 10. But remember, my term started at 74,000. Do you see how in 11 years my term doubled? 165 from starting at 74,000. But look what's happening now at my retirement. At 61, I'm retiring early. Do you see how much I have in saving? If I borrow 90% of that, I can borrow it, start a business, pay some bills, go on vacation, do whatever I want to live off of that year. I can do that. This more than my security would have given me. So my social security, right? But look at something. Do you see there's no more me paying any cash outlay? Now the policy is paying for itself. I am no longer putting any savings or premium at all at the age of 61, all the way to 120. The policy does not need any more cash going in, any more premium going in. The dividends is growing the cash, and the cash also is growing the death benefit. Do you see that? Year 27 years later, 33,000 in free money, $673. But look at my cash, 132,000. It's just amazing, y'all. I just wanted to show y'all this right here is something that I wish we were all told about it earlier, but now we know this information, this does exist. This is insurance been around for over 200 plus years. It's actually, when it comes to the IRS, right, the taxes, that was life insurance been here before even taxes started. They did that after life insurance began. So for those who have children, I want you to see my daughter. She is 13 here. I want to see if I can zoom it up a little bit more. I want to just go all the way down to she only can get whole life. She does not have term. So her death benefit is $126,310. Her full dumping for that year, which is what I'm saving, is $1,225. Right, that's the most I can get out of that policy. Initial for the year, for the first year, is $2,200. But I want to show you something. I want to bring you down to when she's 17 years old. Remember, we're always at the non-guarantee. Do you see how much my daughter has at 17? She has over $9,000 saving. Tell me what 17-year-old right now has 9,000 saving in their account. Not many. But look how her death benefit from 126,000 grew in just 5 years to $167. I'm sorry, $167,000. I want to bring you down to when she's my age. I want you to see that. So I am 44 this year, right? So 44, my daughter going to be 44. Okay, let me show you something. Do you see how much she has? $113,000 in savings. 113,000. She can buy a car. She can put down a deposit on our home. She can use that to buy a business. She can use that to do some investment. She can use it to do whatever she wants because it's her bank. But look how that $126,000 32 years ago now turned to 380,000. Do you see why it's important to start this policy when these kids are younger? So let's talk about the average American saving. I'm going to wrap this up real quick, y'all, because this gets sweeter and sweeter every time I see this. So I want to show you back. Let me just go back to it. This is the average American spending. Auto, 20%, housing, 30%, 40% on lifestyle and living, 10% only in savings. That's if we're doing 10%. But look how much interest is being paid out. Every year, we spend out, not every year, I'm sorry, we can say monthly, 34.5% in spending because we are paying our automobile every month. We are paying our mortgage or our rent every month. We are living every month. And we supposed to be saving every month. So this is how much interest is being thrown away every single month. 34.5% is spent on interest in your house. Let's recapture this 34.5% that's being spent. You see that garbage. You see right here, we're throwing that money down the toilet, y'all. How would your savings change if you could recapture? That's a question for you. How would your saving change if you could recapture the money you have been throwing away in interest? I mean, for me, that would change tremendously because my bank would look so good. So we're actually wrapping up right now. I know I gave you a lot of information, but I want you to continue to learn because guess what? Whatever your age is, you've been programmed and indoctrinated to believe that you can't be the bank. I remember going to a restaurant last on I think it was on Thursday. And this gentleman said to me, I was talking to the guy, and he said, "Isn't it expensive to be your own bank?" I said, "Absolutely not. It's not because they're thinking that they literally have to invest in a bank, buy a building, employ people. No, 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 no. No. You don't got to employ nobody. You don't got to buy no property. You don't got to borrow billions of dollars to start your banking business. You're going to start with what you're normally saving. And if you're not saving anything at this point, I need to see where's your money going? Because your money's going somewhere. What do we need to cut out so you can put away? Because you have to understand we're doing something that's causing our money to leak right out. Those interests. Or we're spending out money going out to eat, buying things we don't need. Downsize if you have to, because you have to know that there is going to be tomorrow. So we want you to continue to learn with us. So we want you to go on corereads.com. There's two books we would recommend. Becoming Your Own Banker is the first book. That is again by R. Nelson Nash. He actually started the Becoming Your Own Banker concept, right? The next book that we want you to get is A Path to Financial Peace of Mind. That is another amazing book that you should have in your library. The next thing is, you know what? A lot of us Americans, we're in debt. We are. I'm one of them. We have a great concept that's going to really truly help you to get out of debt. We're going to use the same concept right here, infinite banking, to get you out of debt in record breaking time. Go to coredebtstrategy.com. There's a short video. I think it's like 20 minutes or less. Watch it and get back to the corepreneur that invited you on to watch this presentation. Okay, so go to coredebtstrategy.com. And lastly, this was a lot of information I gave you. We broke it up in small videos, educational videos, very short videos. So you can go to learnmorewithcore.com. Learnmorewithcore.com. Watch each and every video until you get it. And always remember, we're always learning. I am to the point right now, I'm actually going to get my practitioner license to be able to understand more about infinite banking. I will stay learning. I will stay right underneath the feet of my mentors, Latoya and Tony Chambly. Latoya and Tony Chambly. I will stay right there and learn and learn and learn. Because guess what? Something new is always in defining. Every time I read the book, Becoming Your Own Banker, something new comes up out of it. And I'm like, oh, I didn't know that. Oh, that was good. So go to learnmorewithcore.com. Take some time and watch each and every video. Okay, it's time, y'all. All of this, I said all of this for you. It's time to take control of what you work so hard for. What do you work so hard for? Your money. Yes, we're being given it away freely, unknowingly. It's time to reverse roles. And and become the bank. I want y'all to say that to yourself. I am the bank. Now I am. Before I didn't know I could be, but now I am. Why? I'm going to take control of my financial future. I'm going to leverage it through infinite banking. And I'm going to start benefiting from my hard earned money. That part. So if you were invited by or seen this video through a corepreneur, please connect back with them. If you're seeing this video through me, myself, Melissa Simone Lambert, you're going to go to lambertlegacyfinancial.com to schedule a free consultation. Listen, y'all, if you know me, I run a lot of business, but this is the only business that Melissa gonna run that you get my consultation for free. Okay? Why? I truly believe knowledge is so powerful and this information cannot be kept to myself, or I can't charge this crazy fee where people can't afford. I need you to know this information freely so you can share this with those you like, love, and trust. So please go to lambertlegacyfinancial.com and schedule a time for for you and I to have a conversation, and let's figure out how we can get you back that control that you desire. Remember, go to learn more with Core, learnmorewithcore.com. And lastly, if you can't get to the Lambert Legacy Financial to book that appointment, go to coachmelissa.com, coachmelissa.com. That's COACHMELLISA.com. That part, yeah. Your next step, what is that next step? When you do give us a call, your corepreneur or myself a call, what's going to happen? This is what's going to happen. We're going to give you what we call a priority plan and review. We just want to know what your mindset is on money, about money, where you are, what you want to do. We just want to know so we can help you. Just like you go to the doctor, right? They ask you all these questions so they can understand how to help you. So here with Core Financial Partners, we need to know so we can figure out how best we can help you. So we send you a priority plan and review. It takes less than 15 minutes to fill out. Once you fill that out, the next thing we do is we're going to schedule a review session to answer any of your questions. Again, we are your financial consultant. The third thing that we're going to do is we're going to fill and send back your health and life profile. What that is an application to see if you will be approved for your bank. When we say approved, we're going to send that in to see if they will accept the offer that we're putting on the table. So it's not really an approval, it's an acceptance. Are they going to accept the offer that we're giving to them at the table? So that's what that is, of filling out that health and life profile. Four, schedule a bank preparation. We're going to make sure that you understand what your bank look like. Make sure you have clarity, just like how you saw my bank. You're going to see your own name and your banking information is going to be there, meaning from your age to age 120, how much your money is growing. Fifth, deliver you your policy. That's the fun part, y'all, because your bank is officially set up and it's time to say, I am the bank. And six is my favorite. Continue to learn. Continue to learn how to become your bank and don't keep us a secret. This is not multi-level marketing. This is not, any get rich quick. This is an opportunity to help our community at large, humanity at large, to know that they too can control being the bank. They can control the money they work so hard for. So I'm going to stop this recording and I'm going to answer any quick questions that our guests here on our live have. And then we're going to go forward. So let me just stop again here. Thank you so much for joining. I see we have a couple of our fellow guests on.